Dear traders, welcome to another weekly summary of the MK blog. I got into a routine of doing those either on a Saturday or Sunday. Today is Saturday. And yeah, I think this is fantastic also for everyone here, even the ones who are not subscribed to the blog, to at least understand how the market causality analysis in Forex is conducted and how things look like on different time frames, etc. Let's get started. This week had also some tricky parts, but some very, very great scenarios, which I will use to explain certain points again. Okay, so let's start with pound yen. Here on the 27th of April, I wrote pound yen could clear the upper targets and normalize. Okay, so we had an MTS above the price at 10:22 in the morning and an order gap zone. And what happened is, not only did it take the upper targets as expected, but it went into a complete up move based on the fact that we have shorties while we have squeeze energy. Okay, so those dumb money sellers who try to be smart and to sell cheaply into the pound yen market, they actually led to an overall development towards a squeeze against the shorties, and therefore the smart money algos not only pushed the market up as expected and took those inner range targets, but pushed the market even further up. Okay, so I call this squeeze revival. So the market, of course, is if there's some kind of squeeze going on, if shorties come into the market, of course they revive that squeeze, and that's why they can do exaggerated moves. So if you catch a good trade like this and you see that shorties are coming in, of course you try to ride it, especially when there's an emerging squeeze. Yeah. So well done for the ones who caught those pound yen moves. Now you see the day chart, as I wrote here on the day chart, one can see how the smart money algos used the squeeze revival for clearing that significant price area above the previous long-term highs. So we had a very significant zone here, 1, 2, 3, 4, which got cleared. So these are the situations where on the higher time frames, like the day chart, they are going for targets which were far away before, yeah, with exaggerated moves. And guess what? Look, they also went for the second area, you see? The high there, because shorties kept on selling. Okay, here we go, targeting the day chart high. So well done if you caught the long trade. I mean, a little trade towards the inner range medium-term stop suddenly results into a massive move against all these shorties, driven and fueled by new shorties. These are the situations where you can make a lot of pips in a trade. Okay. And euro yen is maybe also the better example. Look, that was on the 26th, 9:24. I said euro yen looking at the upper inner range medium term stop. So it was some shorties in the market, some squeeze, so long trade. And the same thing happened, of course. It went all the way up because, like I wrote here, again, squeeze mode plus new dumb money leads to a revival of the squeeze energy. The dumb money shorties from today led to a positive slope in the red squeeze line here. The result, exaggerated continuation of the current trend to finish off old and new dumb money shorties. Look at this beautiful move, okay? So we have old shorties caught already because the market went up against them. New shorties trying to sell aggressively at good prices. So that leads to a squeeze revival, yeah? The squeeze line points up again, so boom, it goes all the way up. Again, if you catch a nice entry like here, and you see that shorties are coming in, of course you ride the whole thing, especially if there is an emerging squeeze going on, because you want to be on the side of the squeeze against the dumb money, okay? You don't want to be at the receiving end. And look at that, like I posted here on the forward chart, look at that, shorties coming in, selling, leading to boom, squeeze, upward squeeze line, the red squeeze line, upward sloping and expanding, boom, up over days and weeks, okay? Then some normalization, and guess what? Boom, shorties coming in, again leading to an upward slope, so boom, they go for the highs, of course, yeah? Euro yen here on the forward chart, power of the squeeze, if dumb money shorties just keep on selling like that, and this results into a decisive squeeze mode in the higher time frame, a trend is a result. The market then is sensitive to any new red flow, so new dumb money shorties. Yeah. Never forget a chart like this. Around the world, traders do not understand why these moves happen. This is the reason. Okay. Here, euro yen finishing the shorties. So significant moves. Well done if you caught some of that. Okay, euro dollar, a little bit more complex this week. Let's go through it. So on the 25th, I wrote complex, fragile. We also had several news items in the way. So it did, it kissed the high there, you see, and then some squeeze going on, but then normalized. And I wrote, euro dollar is complex. It's trying some 4-hour reversal down. However, it needs a collapse in the red squeeze line. Otherwise, it will retest the high as soon as just a few dummy shorties came in. The market is fragile. So like before, the market is sensitive towards any red bars, any dumb money sellers, okay? Because the squeeze energy will increase and they will go up and clear the high in these scenarios, okay? However, so what happened here is what I wrote in this screenshot. So we had the collapse, okay? So shorties left the market. Some got kicked out with the stop hunt. Others were able to close the break even because of the down move as well. And then we have a dumb money switch, a mini dumb money switch, okay? So like I wrote here, it's 413. The collapse came. Dumb money shorties left. The 4-hour reversal came in euro dollar, okay? And I did a short trade there, which was really nice, okay? Now let's continue. 26, up then down. So I said euro dollar, if the upper 1-hour targets get cleared and some dumb money longies come in, it can fall back into the range, but that needs to happen first, okay? So if there's an up move, they clear that area, and then longies keep on buying, then it can fall back down into the range, and that's what happened. But so 27th, okay, so let's go through it. So it came down as expected nicely, yeah? But then, so what happened is, again, shorties came in. So they retest the high and clear the high. This area here I've marked, yes? So I wrote euro dollar could go flat, then try a down move at 10.18, okay? Also some order gap zones and medium-term stops in a range. Then on 28 is exactly what happened, yeah? Good prediction, good trade. So it moved down in a range towards those targets because longies kept on going into the market, yeah? Green bars, it appeared again and again and again. So it was a nice short trade. So here on the day chart at 11:45, you see like we had the US news coming. So at 2:30, the US news will decide whether euro dollar will continue the current down move or whether it will at least do a fish bar up. You see on the day chart, it cleared the high, retested the high, long is coming in, and it's trying to normalize as shown before. And then in the evening at 8:27, you see, so it came down, then pulled back up towards the middle of the range, and that got stuck between longies and shorties, you see. Euro dollar still takes into account the dummy longies above the price, these ones here, and the dummy shorties below the price, these ones here, therefore within some kind of consolidation around the middle of the 4-hour range, okay? There's no need to go up and let those longies win, there's no need to go down and let those shorties win. So the market is a bit stuck in there, okay? You can see it nicely on the lower time frame. So it came down as expected, okay, against the longies. Then shorties came in, pullback and flat consolidation. So if you caught 1 or 2 trades there, well done. I caught the short trades. I didn't catch any long trade, okay? But fine. Okay, let's continue for now. I'll show you more complex scenarios in a second. Cable, so on the 27th I wrote low bias, yeah, it took the high, pound neutral, rather bearish, rangy, okay, rather bearish because look, with a mini collapse in the squeeze line, it took the high, so you know, no money flow, so can normalize and do some rangy move, and that's exactly what it did, okay, short scalp down towards the order gap zone here, okay, right after the news. So after the news I caught a short trade here. Nice scalp, nothing wild, but you know. On the 28th, you see, so it took the lower medium-term stop on the 1-hour chart, and then again we had 2:30 US news, and now things get interesting. Okay, so it cleared that target. The news came out, and shorties went into the market. Dominant shorties thinking, oh, the dollar needs to get stronger. I need to sell, and because they sold, it led to a big up move above the high. I didn't catch the long trade because it was a bit fast, you know. So here, pound dollar took the lower MTS and pulled back up. The dominant shorters entered, increased the red squeeze line again. So when I was go for the kill of the shorties by clearing the high. Yeah. And when you look at the day chart, like here in the evening, you see it cleared again, like on the you remember the other yen pair. So here on the day chart, it used that to clear the significant price areas. Okay. But tradability a bit tricky if you catch if you want to catch a long trade like that. You need to be very fast and you need to be right in front of the screen when these things happen. I missed it, which is fine. Okay. Europe, but I caught, however, as I've shown before, I caught the short scalp. Euro pound, 25th of April, so it cleared. Look, order gap zone, MTS, order gap zone. Then I said filled MTS, now neutral. Okay, so it was on the 25th was neutral. 27th, I caught, I think, a short scalp because we had this inner range target there and some longies. And then, however, on the 28th, it did not only take those targets. Look, Euro pound cleared the lower targets, some dummy longies, but both squeeze lines are low and below the middle line, showing neutrality. So we don't have a squeeze going on, but with some longies coming in, and it went all the way down. Look at that. Longies kept on buying, so boom, expanded down move towards the lower target. If you caught this one, nice. Okay, Kiwi dollar, again a good prediction. You can see my strike rate is really good. My analysis is spot on. You won't find this stuff anywhere else. And we come also to a losing trade in a second. Somebody asked, can you also talk more about that? I love that. But first, yeah, here Kiwi dollar, so 26. I said, like Aussie dollar, Kiwi can come lower because, look, that's not difficult. Come on. Longies in the market, old longies, new longies, okay? A squeeze on the day chart going on. And this low as a target. And above the price or longies, of course, the market will come down. Okay? Easy short trade. Just write thing down. Okay? Not difficult. The 27 came off. Not taking order gap zone. Look, it filled all those targets. Came down below here. Okay? If you see there's such a scenario and then you see those little targets on the lower time frames, of course you can trade them. Yeah? And the 28 came off as expected. Okay? And then it took profit. 26, so Australian dollar, they're correlated, they're similar. But look at it again, 26 Aussie dollar, similar thing. A low on the longer time frame, a long-term stop here, the pink line, longies, an emerging squeeze on day chart, okay? So I said bearish. And here 28, you see it came down as expected all the way towards the low. Not difficult to trade that. If you see the longies coming in the meantime, you just write the thing. Okay? It's a great trade, seriously. Okay, dollar yen, looking at the 200 moving average target on the day chart, the blue line. Remember the meter level, which explained in the video course. The same thing like with the other yen pairs, with shorties coming in, so the breakout to the upside, and they could even clear that. Okay, aggressive move, dollar yen. I didn't catch that, only at a later stage, but that's fine. Pound Aussie, yeah, that's an honorable mention. Look at that, a squeeze. Okay, shorties coming in, a squeeze, up move against the shorties. New shorties coming in, and look, boom. Okay, if you see a squeeze and non new shorties coming, you can trade against them. Okay, even if it's an expensive entry for yourself in the market, you know there won't be a reversal down or full reversal down. The squeeze will dominate. Okay, the smart money algos want to finish up all the dummy sellers they caught and the ones which came in now thinking they can trade cheaply. Okay, you trade up by buying. Euro Aussie similar. Dummy short is getting squeezed out. Okay, look at this at the day chart. Power of the squeeze. They're getting smashed. Okay, shorties, boom up, and it doesn't matter how high the market is already. It doesn't matter. That's what destroys all the systems and traders. They think, come on, how high can it go? It should normalize. No, that's what the dumb money thinks. That they think, oh, I sell into the reversal, not realizing that the market will do an up move against them in exaggerated fashion. And then what? Will they complain to what? You know? Oh, why didn't the market come off? It's already high. Oh, really? It can go higher. Guess what? And I have to say, you know, many years ago when the market causality wasn't fully developed, We first had the position bus, but we didn't have the squeeze, and it was confusing when sometimes it just went up and up and up. But today we know, okay, these are the squeeze dynamics. It was great when I added this. Okay, I want to talk about this. Okay, so I would consider this a failed trade. So the 27th dollar cut, for reversal but advanced, I wrote. Yeah, that looks like it would like to do a for reversal down, because look, it took the high here, but you guessed it, beginners should never trade against the squeeze. Okay, and even advanced traders, if they want to attempt like a for reversal, like, while the squeeze is still existing, I mean the slope is slightly decreasing, but you have to wait more until it does a proper collapse. But you can of course try to enter early into such a move, but you need to put a stop here. Okay, because if the squeeze gets a revival and shorties come in, you want to get stopped out. There will be no chance to work your way out, because this can be an up move, hundreds, sometimes thousands of pips if there's an ongoing squeeze. Okay, that is something you never want to do. You never want to end up on the receiving end of a squeeze. You will get smashed. Don't try to average down or anything. Okay, so here I took the short trade, but I got stopped out because exactly that happened. Shorties came in and revived the squeeze, which was already strong. And you either want to get stopped out, or very advanced market causality traders, they already put in a buy trade, because they know that if this fails, it will go up. Okay, and that they in most cases will not get whipsawed. If they lose on the short trade, they will win on the long trade. It's unlikely that then the market switches again or anything like that. Okay. But in this particular example, it actually went up all the way, and then on Friday it came off again after the news. So let me show you 28. Squeeze continuation. So here we go. Okay, with short is coming in, and the squeeze didn't collapse, and therefore retest of the high, clearing the high. Here, the $11 cut, because of the existing squeeze mode, it is very sensitive to any new dumb money shorties. So once some dumb money sellers came in today, the smart money algos pushed the market up against them once more. Note the slope of the red squeeze line. Look, it's increasing again. Okay. Then later the day, after the news, what happened? Look, after they took this target zone, then they normalized, because longies came in. So dumb money switch. You see some shorties left. Longies came in, so did a normalization move down. And I did a short scalp here, and I got back a bit of my losses on that for our reversal trade down. You see, like, that's how powerful the market causality is. Once things clear up, you are able to, analyze correctly. But be cold, be like a machine, be very smart with your analysis. Okay, do not get tricked into getting whipsawed by the smart money algos. Okay, have a strong mindset. Say, you know what? Either I just skip this whole thing, or if everything clears up and there's a switch, I will try to do a new trade. Okay? But remember what I said. If new shorties came in and revived the squeeze, they will even go higher and higher and higher, like they did here. Okay? Like I showed in the other markets. Okay? Do not be on the receiving end of a squeeze. Yeah? Sorry, I can't say it enough. But this, you understand, these are the secrets of Forex. Okay? Because that is the stuff no other traders understand. And, they may have a reversal system. Guess what? The reversal system may work for some time and catch some 4-hour reversals. Then it gets smashed when the squeeze happens. I will do a separate video about that. But if you want to oversimplify, you could argue there are two modes. Okay? Rangy modes, where there are 4-hour reversals, and squeeze modes, where there are trends. And we see what mode we have in each market in front of our eyes. How cool is that? That is why this is a holy grail. Okay? So you want to be adaptive. If there's a squeeze mode, you want to trade against the positions which get squeezed out. You don't want to be on the receiving end and get squeezed out yourself. When there is a range mode and there are 4-hour reversals, you want to trade the 4-hour reversals. You don't get whipsawed. Like, that's a problem. Trend traders, they get whipsawed in the range mode, yeah, because they get moving average crosses and whatnot, and they try to trade trends, and they lose. But reversal traders get completely smashed in the squeeze trend modes. As simple as that. Okay. Now we are able to see what mode is which, and as you know, last week I predicted even the the consolidation modes in euro dollar, where you can do range scalping on the lower time frames and all that. We see what's going on, okay? It's not rocket science to do this analysis correctly, to understand what mode you're in and what trades you can take. And yes, sometimes if things are not so clear and the bias is low, you can still take a shot. This may have worked if the collapse came eventually, and the shorties left the market, and I may have had a very good entry into a move down here, okay? But I know, of course, when I do those trades, they're advanced and they are risky because this dominates, okay? Boom, yeah? If shorties come in, you will see a revival, okay? So yeah, beautiful scenarios. I mean, this is so much fun. Do you like this stuff? And please leave me a like and a comment to keep me motivated. I mean, I love that stuff. I mean, this is just incredible to be able to show that, to post that live and to explain that after the fact also to everyone. It's just so amazing, And this is the insight into the machine here. This is how it works. The smart money algos against the dumb money, filling all kinds of order gap zones, but going after the stops, the short-term, medium-term, long-term stops. Okay, luring in the money positions, trapping them, and finishing them off with moves, clearing highs and lows, even the higher time frames. Then eventually, when the job is done, going back into some kind of rangy mode and playing Pac-Man. Okay, filling all kinds of targets and levels. Doing 4-hour reversals. That's all they gotta do. They just need to change between those different modes. That will destroy all kinds of system and strategies on the dumb money side. I've explained that many times, but you get it. Like they only need to switch naturally between those different modes, which they do in response to the dumb money. Okay, not leading the dumb money. They are just waiting what the dumb money does. Okay, like they throw out the fishing net, and the dumb money will end up in the net on one side, so to speak. Yeah. And as you can see, like, look, I mean, this is ridiculous. I shouldn't be able to reach those kind of strike rates with those predictions, okay? But that's why I call it market causality. There is causality. If you see what's going on, you can predict the next moves. And your rate of prediction, your accuracy will be very good. Like unheard of in terms of anything remotely similar in Forex, trading Forex. While the dumb money has no chance. The dumb money simply has no chance as a collective, And that's, by the way, maybe I should explain that a bit. That's why I'm a little bit skeptical when it comes to those new approaches. People talk about the smart, they call them smart money concepts, and change of structure and all these things. I mean, just reading the naked chart. I mean, do you really want to tell me that by reading the naked chart you will consistently predict? No, that doesn't make sense. You need to understand and see what's going on with the market structure, in actual terms. Are positions leaving? Are new positions coming? Overall, where are the positions? You know what I mean? It's not simply reading a chart pattern. That doesn't work. Because look at all these erratic moves. Okay? They take the target to the pip. Look, pullback. You understand? Like, there's nothing random. They fill the order gap zone, then go down. You want to tell me that if you don't see those things on your chart, you're able to predict that on a naked price chart? Come on. Yeah. So even with all this information, you still need to have done your homework and understand how this works and prioritize correctly, wait, have patience, and of course do all the other things like proper risk management and, mindset, stay disciplined, and trade like a machine based on facts, not on fiction. Okay? All right, I think that's enough for today. I enjoyed it. Some beautiful examples, okay? And remember, another thing I would like to mention here. If you're a manual trader, you need to have some trades where you caught a nice run, okay? Do not just take a few pips and then close. In order for many approaches and systems and strategies to be profitable overall, you need to have those runs where you caught a high number of pips in one move, okay? If the dumb money's on the other side, why wouldn't you just let the thing run? Okay, do not just take a few pips. In most cases, this is emotional bias. You want to close a trade and make a tick on your list and feel good that you made some money. No, you need to also catch the long, nice moves where everything aligns and works like clockwork and moves more in your direction. Okay, look here, expanding squeeze line. And those kind of profits make up also for a lot of smaller mistakes, or maybe situations which were tricky where you got caught on the wrong side or whatever it is. Okay, where maybe you were surprised by some news, whatever. Okay, I mean, it's important, to also let things run. Okay, all right. I think for today that's enough. Thank you for your time. If you are learning all this, I motivate you to keep on learning. This stuff works. Okay. Respect the algos, how they play this game. Okay. Always think in terms of what does a dumb money think and what does the smart money think. All right. And just execute well. Lots of love. Have a great weekend. And have a fantastic next week.